So what really makes us buy or sell in the stock market? We think it's all about spreadsheets and expert analysis, right? But what if I told you that one of the biggest things shaping your portfolio is your pillow? Yeah, you heard that right. We're going to dive into some brand new, kind of surprising research that connects how you sleep with how you invest. All right, so let's start with this idea, the sleepy trader. When you think of a tired investor, what comes to mind? Probably someone making crazy, risky trades, right? Let's dig into that common assumption. I mean, who hasn't been tempted to do this? Pulling an all-nighter, glued to the screen, watching the markets churn. You're thinking, I'm going to catch that perfect moment. But here's the real question. Does that make you a trading genius, or are you just setting yourself up for a big financial mistake?
Yeah, the common wisdom here is pretty straightforward. You'd think, and honestly most experts would agree, that being exhausted just leads to bad decisions. Your brain's all foggy, your judgment's shot, and you're way more likely to do something impulsive, something high risk. It makes sense, right?
And this isn't just, a gut feeling people have. Researchers actually turned this into a formal hypothesis. They basically said, okay, let's test this. Our theory is that investors who sleep poorly are going to show more high-risk behaviors, like trading way more often and not holding onto stocks for very long. So they put this common idea to the test to see if it really holds up.
Okay, so how on earth do you actually study this? In the real world, I mean. Well, that's what's so cool about the research we're looking at today. It's a super clever study that managed to get a peek inside the minds and, more importantly, the actual brokerage accounts of everyday investors.
So forget lab coats and simulations. This study went straight to the source. They followed 405 regular individual investors and looked at their real trading data. We're talking real money on the line. At the same time, these folks kept daily sleep diaries for over a month. And here's the best part. They captured data during two totally different markets, the huge bull run in 2021 and then the big downturn in 2022. That gave them this amazing, rich set of real-world data.
And this is where it all gets wild. Because when they crunched the numbers, the results didn't just challenge what we thought we knew. Nope, it turned everything completely upside down.
So remember that whole idea that being tired makes you trade more? Well, the study found the exact opposite. The myth is that poor sleep equals more trading, but the reality? It's that good sleep equals more trading. The well-rested people were the ones who are actually making all the moves. And we're not talking about a tiny difference here. Just look at the bull market in 2021. The investors who didn't get much sleep, they averaged about 28 trades that year. But the ones who slept well, they clocked in at 57 trades. That is more than double the activity. The well-rested investors were way, way more active.
So what gives? Why is that happening? Well, the researchers have a pretty solid explanation. It's not that being tired makes you impulsive. It's that being well-rested gives you the mental clarity and the confidence to actually do something. They said it perfectly. Better sleep gives you better mental clarity, which makes you more confident in your own predictions. And that confidence, that's what leads to more trading. Good sleep doesn't make you lazy, it fuels action.
But hold on, it gets even more nuanced than that. The researchers realized that this isn't a one-size-fits-all kind of thing. The effect of sleep actually depends a lot on what kind of investor you are. Turns out, how a good night's sleep affects you changes big time based on two things: your trading style, are you active or passive, and which way the market is heading. Okay, this is where it gets super specific, so let's walk through this table together. First, let's look at the passive investors. When the market was up, the better slept ones actually held fewer stocks, kind of slimming down their portfolio. But when the market was down, they held more stocks, probably spotting some bargains. Now check out the active investors. It's the complete opposite, a mirror image. In a bull market, more sleep meant they bought up more stocks, spreading their bets. But in a bear market, that well-rested brain told them to hold fewer stocks, to cut back on risk. Crazy, right? All right, so sleep definitely changes how we trade. But that leads to the big question. The million-dollar question, you could say. Does sleeping better actually make you richer? Well, for one group of people, the answer is a big, flashing yes. For those passive buy-and-hold style investors, the study found a direct link between good quality sleep and better returns. And we're talking statistically significant. This wasn't just a fluke. And it's not just about how long you sleep. It was about the quality of that sleep. The data showed a really clear path. The longer people slept and the fewer times they woke up during the night, the higher their investment returns were. For this group, it was simple. Better sleep literally meant better performance. But What about the active traders, the people who are in and out of the market all the time? For them, the story was totally different. Sleep quality didn't really connect to their returns in the same way. What mattered more for them were the things you'd expect, how many years they'd been investing, if they worked in finance, that kind of stuff. It seems like for the super active crowd, experience just matters more than sleep when it comes to the bottom line.
So, let's wrap this all up. What's the big takeaway here? It kind of seems like your pillow might just be the most underrated and definitely the cheapest financial advisor you'll ever have.
Okay, so here's what we've learned. First, good sleep doesn't make you sit on your hands. It actually boosts your confidence and makes you trade more. Next, the effect of sleep isn't the same for everyone. It really depends on whether you're an active or passive investor. For those passive investors, better sleep can directly translate to more money in your pocket. A couple other cool tidbits from the study. Taking a nap in the afternoon can make you more alert and proactive. And on the flip side, poor sleep quality, like waking up a lot, was linked to holding more stocks no matter what the market was doing, which might just be a sign of anxiety.
And that just leaves us with one last question to think about. We spend so much time looking at charts and listening to experts, but this research proves that something as basic as sleep is a huge invisible force shaping our financial lives. And it really makes you wonder, if sleep can do all this, what other simple, hidden habits are secretly running the show in the rest of your life?